This is Craig Haugard with your Financial Issues Ag Update. Corn futures were pressured by a weekly U.S. export sales report showing the demand for U.S. corn is relatively weak, with only 34 million bushels marketed this past week. Marketing's year-to-date commitments are running 540 million bushels behind year-ago numbers. As I record this, the overnight spot corn futures are $0.015 lower. Yesterday, I was impressed by soybeans' ability to shake off the outside influences and close higher for the session. An extended dry period in Argentina and harvest disruptions in northern Brazil also provided some support to the market, as did that single cargo of soybeans that were sold to China in the export sales report. That was the only highlight in the weekly export sales report, though, as we came in at a meager 12.5 million bushels. On the other hand, South American news, Buenos Aires Grain Exchange raised their soybean production estimate up to 54.5 million metric tons. I believe that's about 4.5 million metric tons more than the USDA has been factored in at. And from an export perspective, current spot values favor Brazilian soybeans into China anywhere from by $6 to $15 per metric ton. So I would look for exports to continue to struggle in the near term. In the overnight trade, we're kind of back to where we started out yesterday, down double digits, trading 8 cents lower in the overnight trade as I record this. Wheat was under pressure yesterday as we saw funds liquidating their long positions. Chicago and Kansas City futures have now been lower 6 out of the past 7 sessions, while Minneapolis has been lower 5 out of the 7. The export sales were disappointing as well, coming in at 14 million bushels. Now, with 25% of the marketing year left, the probability of hitting the USDA's annual export projection looks to be in serious doubt. In the overnight trade, we have Chicago and Kansas City trading 4 cents lower, while Minneapolis is unchanged. The fear generated by the coronavirus continues to wreak havoc in the cotton market. Yesterday saw May cotton futures closing down 297 points, settling at 62.50. In the overnight trade, we are trading down an additional 82 points. The livestock markets were straight across the board. The April live cattle futures contract finished down $1.87.5, while April feeder cattle were $1.90 lower. Lean hog futures were also hit hard, with the April futures finishing the day down $2.60. Class 3 milk futures continued their string of losing sessions, with the March futures closing down 15 points as they settle at $16.32. And while the livestock futures markets were getting brutalized, the cash livestock market had somewhat of a mixed close. At the finish line, we had choice beef boxes 80 cents lower as they settled at $205.54, while selects were actually up $1.09 as they closed at $199.69. And we had pork carcass values retreating slightly as they closed down 20 cents to settle at $64.29. This has been Craig Haugard with your Financial Issues Ag Update.